I'm going to tell you something that you can take to the bank. In this business, people will try to make you.
Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back, everybody, to Be The Trader. Today is going to be a special day because I have my man Joe Valenti here, and you need to hear this man's story and the wisdom he's about to share. He's been trading for over 50 years, although he found it as a hobby much earlier than that, for over around 60 years. And so with that being said, I wanted to bring Joe here today to share some of the wisdom and how he's seen the market, because now he's going to be 91 in 2 weeks. So Joe, welcome to the show.
Thank you, Alex. Appreciate it.
Absolutely, man. I wanted to get you out here so bad. I'm so thankful for you to be here. I really want people to learn from someone, you know, they say learning from your mistakes is really important. We'd love to hear some of the mistakes you've made over the years you've been in the markets.
Yeah.
So that way other traders can learn from that.
Before I got in the business, my first thing was I went to A.M. Kidder's office. Mm-hmm. And there was an old man sitting in the chair. And he says, son, he called me son. He says, I want to tell you something. And I said, what's that? And he says, I just want to say that there's good traders and bad traders. And I know you're in here to watch the tape. In those days, they had girls marking the board.
Yep.
And with mainly the Dow Jones 30.
Okay.
General Motors and Ford, stocks like that. There was no NVIDIAs then. And this old wise man, he told me, he says, I'm going to tell you something that you can take to the bank. In this business, the people will try to make you buy something or sell something all the time. And the most important lesson I can give you is that the contrarian opinion is valuable. And it is valuable because if you're a contrarian, you don't go with the crowd. And that's one of the best lessons I ever learned in my life. And he told me also, he says, you don't want to follow the masses. You want to do stuff that the masses don't follow. And I said, obviously he was right. And me and my son both did that traded that way. And it was an important lesson. And that was going when I was 21 years old. And I bought my first stock at 21. And that was Motorola.
That's amazing.
And I bought 50 shares, and I was probably 21, I might have been 22, and bought 50 shares. And if I traded it well, I had a swing trade,
yep.
And I probably kept it for a year and a half or 2 years,
yep.
And I think I doubled or tripled my money. But if I'd have kept it long term, the company split into 3 different companies, and I would have made a heck of a lot more money. And that was a valuable lesson to me. You know?
Oh, yeah.
But I was a short-term trader because I didn't know any better.
Yep.
That was my first important lesson that I learned. Don't follow the masses. After that, I got into the brokerage business when I was probably 31 years old.
Okay.
And my first company that I traded with was E.F. Hutton. You recall, when E.F. Hutton talks, people listen. And they had a great advertisement, and it went for a long ways. And then there was a period of time when I stayed in the same chair, and we went through 4 different brokerage houses because they bought out Indian, and the last one I worked with before Wells Fargo was Wachovia. Mm-hmm. And me and a friend of mine, actually it was 8 of us, we were on a Greece trip to all the islands of Greece, and we called home all the time via phone.
Yep.
And it wasn't a cell phone; it was a regular house phone, and to find out what was going on. And that happened to be the crash of '08 and '09, and it was Wachovia went broke. They went all the way to $1 a share, $2 a share, and then went broke. And Wells Fargo took them over. They had another bid that was higher, but they wanted Wells Fargo because they were the stronger company. And I went with Wells Fargo, and I stayed there before. There were 4 different companies that didn't move from my desk.
Yeah. We cover a lot of information on trading here on Be the Trader, but none is more important than the broker you choose to execute your trades. There are many reasons I use Cobra Trading every day, including multiple order routes where I can get fast execution, great availability on locates for hard to borrow stocks, and fantastic customer service. But don't just take my word for it. Both Benzinga and Forbes Advisor have awarded Cobra for best in class for short selling and day trading. Isn't it time you choose a great broker that you'll enjoy working with? Sign up now by using the link below, and Cobra will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. I know you'll be as happy as I am when you trade with Cobra. Now let's get back to the show. So what's amazing is the whole idea of, you immediately say contrarian. Like, that's something that's very, very valuable.
No question.
And can you give an example of how to think contrarian when it comes to that, like for maybe something you've done in the
you
past?
just don't follow the crowd.
Okay.
If the crowd's always bullish,
Yep.
and if you listen to TV, they're always bullish, basically, and you can't follow the crowd because at the tops and at the bottoms, you won't be there. The top will fool you and the bottom will fool you, and you will not be there. But you know, the thing about it is we're all a product of doing things ourselves. The year 2000 was an amazing time because when 2000 came, nobody was ready for a bear market. They thought, well, it's going to be amazing. And we started a bear market probably within 3 months after that or 4 months after that. And we really went down a lot. But the most terrible thing that happened was 07, 08, and part of 09, where the market was down 600 points, 800 points, 1,000 points almost daily. And when it would rally up 200 points, 150 points. And then it'd start back down again. And the bottom finally came when the Bear Stearns went broke. And after Bear Stearns went broke, Lehman Brothers went broke. And for some reason, they couldn't take the heat. And when both of them went down, the market bottomed, I think it was either late October, early November. And I will recall this. I took a client of mine who at one time was probably worth $15 or $16 million. And what he did, he said, I want to go back in the market now. And he was down to $6 million. And I said, okay, well, let's go with this money advisor, money manager. And we took him there. And I said, his name was Tony. I said, Tony, what do you want to do? After we talked to them for about an hour. He said, I want to give it all to him. The whole $6 million? Yes. And he did. And that $6 million became 28 or 30 million within the next few years. They were good money managers. And we use money managers from time to time. But I traded on my own because I loved it. And everybody laughs at me now because I don't buy a lot of shares. But in those days, we would buy 1,000, 2,000, 10,000, 5,000 shares because we were there every day. And it was an amazing time.
What was some lessons you've learned from being in bear markets that you can give people who haven't experienced?
You got to love a loss.
Yeah.
If you can't love a loss, you're in trouble. Because you know that people, they can always bear their profits and they love to make money, but their stories are all about making money. But if you can take a small loss in certain times when you feel you're not comfortable, you got to do it. That's why I say you got to love a loss. And I used to tell my son that you got to love a loss. If you don't, you're in trouble. Don't be afraid to take a loss. And I've never been afraid to take a loss. And the good times will be there for you.
Yeah.
But you know, it's just like when we took a ski trip. We all went to not Vail, Steamboat Springs.
Yeah, I love that place.
You do, and it was great. We had a time, but on the very first downhill, I got trapped. I thought I was on a green, and I got trapped on a blue, and I fell, and I broke something.
Yep.
And I had the ski patrol guy came by and told me, "Are you hurt?" I says, "Yeah, I don't feel right." He says, "Can you make it downhill?" I said, "I think I can." Well, I got back on the green. He showed me how to get back on the green, and I went downhill and got to the bottom of the slope, and I was in terrific pain. But I went to the hospital, and they didn't bandage you up or nothing. He showed me the x-rays, and it was a Z fracture on one of my ribs. Well, that night, I couldn't breathe. And I had all the kids with me. There was about 12 of us. And I had rented a big condo and had plenty of rooms and plenty of beds. And I went to bed that night, didn't know what I was going to do. I knew I couldn't ski anymore.
Yes.
I could hardly breathe. And that next day, I made one of the best trades I ever made in my life. I bought options in the Japanese Nikkei index. And I didn't know anything about it. I just they looked good on the chart. I was a technician by nature. I knew fundamentals too. They counted, but I was a technician at all points. I could buy easy, but I could also take a loss.
Yep.
And you had to be able to do that if you couldn't take a loss. Anyway, that ski trip ending on one of the best trades I made with options on the Nikkei.
Yep.
I made $95,000 within a week.
That's nice.
Went back and got on a sailboat with my wife. I was still hurting.
Yeah.
But got on one of those luxury sailboats to go to the Bahamas. And we did that. And it was great.
I love that.
Yeah, it was a great time and a great story. And it wouldn't have happened unless I had got hurt.
Because you had time.
On the ski, on the slopes.
That's nuts.
Yeah.
Is there a time where you yourself struggled with taking a loss at the beginning? Like it was tough for you to take a loss, or
No.
You've always been easy?
No.
Like you've always I could just take a loss.
Well, I didn't know any better. When I first started trading, and everybody has losses, believe me.
Yes.
But they got to be able to take losses. Try to make them as small as possible.
Yep.
But you got to love a loss. And I always liked a loss. Not deep down, but I didn't mind taking it.
Yep.
And if you can't take a loss, you're in the wrong business.
Have you seen traders who've done very well for extended periods of time, and then they're no longer here because they didn't trade well anymore, like they couldn't take a loss?
You know, I've seen some of my best friends that got into positions they should have never got into, but they didn't realize it, and they couldn't take a loss. And it really, I saw them crying.
Yep.
Because they made mistakes. I've never cried over a mistake in my life.
Yeah.
You make them.
Yep.
You take a loss.
Yep.
And that's what I always tell. And I told my son, you got to love to take a loss.
Yep.
And not be worried about it. But no, I could always take a loss. I was born that way. And maybe I was afraid, because if I'd have stayed with Microsoft when I first bought it, you know, the stock went from 15 to, or from 20 to 60.
Yeah.
And then all the way back to 15 or 13 or 12 again. And I bought it again. But that's one stock that you always think, I should have stayed. Because it's still doing great. It's $430 a share or whatever it is. And that's one stock that if you could have stayed in it. But that's hindsight.
Yeah.
And it's just very difficult to do. I'm not a day trader by any means, but I would swing trade, but I was not afraid to take a loss.
You know, you're a technician at heart, and you understand fundamentals, But what would you say, do technicals override fundamentals? Like if technicals are saying this is bullish, but the fundamentals are saying bearish, do you ignore fundamentals?
Right. Well, you know, the technicals are everything. The fundamentals are great to have and great to own. Everybody says, well, I'm going to buy this because it's got a low price earnings ratio. And you can have that and do it that way, but that's not the right way. You got to look and see why is that stock down and selling at 9 times earnings. I would always want to buy the one selling at 30, 40, 50 times earnings, 80 times earnings, just like NVIDIA. I've traded NVIDIA several times. I wish I'd have held it from $6 when we first started trading it.
Yeah.
But I didn't do it.
Yeah.
But whenever I had a loss in it, I was able to take it.
You know, before we start to wrap this up, I did want to find out, is there any other lesson that maybe I haven't touched on that you want to share that can really help someone from maybe a mistake you've made in the past or anything like that?
Well, other than my first marriage.
Yeah.
Okay. Well, but you know, she was okay. I had 2 great children with them,
Yep.
with her. But my second marriage happened to be for 50 years
Yep.
and was wonderful.
Yep.
And you just, you know, you got to be lucky sometimes. And I was lucky. And me and my son's wife just were not compatible enough. That's all it was. Other than my first marriage, I really didn't have any bad stories
Yeah.
like some of my friends had.
Is there maybe a story that maybe your friends had that you could share that lesson with us before we end this?
What they did is they bought, never forget it, because I was a manager of one of those offices at the time, and I had to console him because he'd go home, he'd cry almost every day because he was losing money and losing clients. But he bought puts in Occidental Petroleum, and they went against him. And it cost him a lot of clients and a lot of money. But he couldn't take the loss. And I never told him the story that I told my son about you got to love a loss.
Yep.
Don't be afraid to take it. But he still in the business. He's still trading, and I thought I was a better trader than him, but he still trades. I don't trade as much as I swing more. I'll buy something and keep it, but I don't buy several thousand shares like we used to do.
Yep.
Just don't do it because I'm 91 years old. I don't need the risk.
Yeah, you don't. Well, look, Joe, I appreciate you coming on today and sharing your wisdom and helping a lot of people out there really learn from the experience and the lessons you've had over these years. So thanks, Joe. I appreciate it.
You're welcome, Alex.
Thank you for finishing today's episode. If you're watching on YouTube, please leave a comment below of one of the takeaways that you are going to implement into your own trading. And if you happen to be listening on a podcast platform, go ahead and leave us a review and let us know what you enjoy about today's episode, because that does go a long way in helping us continue to grow. Again, thank you from the bottom of my heart, and I look forward to seeing you on the next episode.